I'm Shelby Holiday, and it's time for Barron's Buzz. Joining me to discuss the latest issue is senior editor Jack Howe. And Jack, how about this for a summer Friday? Investors woke up and saw that Amazon is buying Whole Foods. What does this mean for Amazon, and more broadly, what does it mean for grocers?
And what does it mean in my household where we shop a lot?
Yeah, what the heck?
Well, this is it's a transformative deal. It gets Amazon big time into food, big time into brick and mortar stores, and it changes the retail landscape. They have an opportunity here. Whole Foods is sitting at somewhat of a depressed share price right now. It also, I think, has some scarcity value. This is a company where there are a lot of supermarkets that you can compare among one another. Whole Foods is not one of them. This is a unique company. I think that this is it's an interesting fit with Amazon because of Whole Foods' very strong private label brand. When I complain about the prices we pay at Whole Foods in my household, my wife always counters with, well, the 365 brand of this or that, the baby wipes, they're cheaper than the other brand, the 365 brand. You know, Amazon has really become this almost a company that's making brands less relevant because of the reviews that people rely on and its site. It doesn't need the power of brands. It doesn't need the premium pricing of brands. So a strong private label merchandise line fits right into what Amazon is doing.
Well, the article also points out that the brick and mortar aspect of this could be a great fit for Amazon as well, because when you go into a Whole Foods now, they've almost become a warehouse. You see all these Instacart shoppers, deliveries. It's almost like you're the only shopper in there sometimes.
It really makes you wonder what kind of potential this has to go forward. I mean, obviously people worry about, with grocery delivery, am I going to get the right head of lettuce? And here you can, I guess, order it and you can stop by to pick it up. But when you pick up your bananas, will you also be able to pick up, I don't know, that wood chipper that you ordered? Will there be some space there in one day where Amazon is dropping off packages from the larger online store? We shall see.
It'll be interesting. And speaking of retail, let's transition. Retail's at a bad sector, but let's look over at tech. Tech's been falling. Is the rally over? Where do these stocks go from here?
We don't think so. If you have sat on the sidelines in tears because you couldn't get your head around some of the elevated valuations of these tech stocks, we've had a bit of a sell-off now. It gives you a second chance. Also, take a fresh look. You might be surprised at some of the good, clean money these companies are making now. The profits, the cash flows, particularly the free cash flows, are really up there. So when you talk about companies like Facebook and Google, now Alphabet, there's a solid argument to be made that these stocks are pretty reasonably priced. Even high flyers like Amazon, you can start to look at the cash flows ramp up and predict several years out in the future and say, this company might be on a trajectory to grow into its share price. It might not be so high priced after all. We've got some thoughts on which of these stocks investors should favor and which ones still look too pricey for our tastes.
Great, so take a look at tech. And last but not least, bank stress tests are coming up at the end of the month. What is the outlook for investors?
We think the outlook for banks is solid right now. We had a visit from Jamie Dimon at JP Morgan this past week to talk broadly about the outlook for the sector, and we have a couple of his thoughts. But look, rising rates, the Fed is hiking rates. We haven't seen the long end of the yield curve respond yet.
Right.
There's every reason to believe there's going to be a delayed reaction. The long rates are going to rise eventually, and when that happens, I think lending profits probably improve for banks. I think there's upside there. And with the stress test results, every sign we're seeing suggests that these companies, the big banks, the JP Morgans, the Bank of Americas, the Citigroups, they're going to come in with strong capital levels. They're going to be allowed to release more funds to their shareholders. We see a near-term future of rising dividends, more buybacks. Some of these names, you can buy them at a 2% dividend now. As those payments rise over the next few years, you're going to end up with a 3% dividend as a percentage of today's price. So if you're an income hunter, maybe you lock in some shares today.
And we'll have some details, 2 weeks from now? About 2 weeks?
About that, right.
So we'll be watching for that. All right, Jack, thank you for being here.
Thank you.
As always, you can catch Barron's online and on newsstands. Have a great one.